Today, we will be discussing another stock which is priced around $2 but has huge upside potential once things move in its favor. Opendoor Technologies presents an exciting investment opportunity for those seeking to ride the wave of the future in real estate. Opendoor is revolutionizing the traditional real estate process, offering convenience, transparency, and efficiency like never before. As a pioneer in the 1P3P hybrid model, Opendoor is uniquely positioned to capture a significant market share and disrupt the industry with a focus on customer satisfaction and a commitment to technological advancements. Opendoor Technologies has experienced a remarkable turnaround over the past 5 years. In 2018, the company reported revenue of $1.84 billion, which significantly grew to $4.47 billion in 2019. Despite the challenges posed by the COVID-19 pandemic in 2020, Opendoor showcased its resilience by achieving commendable revenue of $2.58 billion. The company's revenue continued its upward trajectory, soaring to $8.02 billion in 2021 and an impressive $15.57 billion in 2022. This exceptional growth can be attributed to Opendoor's positive and upward trending contribution margins, demonstrating the company's strong unit economics. Opendoor Technologies' success story is a testament to its ability to navigate challenging times and capitalize on opportunities within the real estate and technology sectors. Opendoor Technologies is expected to see decline in annual revenue as compared to 2022, with projected estimates of $7.89 billion in 2023 and $8.88 billion in 2024. The company is also anticipated to report net losses per share, with an estimated EPS of negative $1.16 in 2023 and negative 83 cents in 2024. These figures indicate that while the company's revenue is increasing, it is still operating at a loss. The forward P/S ratios of 0.19 in 2023 and 0.17 in 2024 suggest the market's valuation of the company's sales. It is crucial to closely monitor Opendoor Technologies' financial performance and efforts towards profitability in the future. Opendoor has the potential to generate extra margins by offering ancillary services to buyers. Analysts anticipate Opendoor's long-term profitability to fall within the range of 6 to 10%. The introduction of Opendoor's 3P marketplace and the possibility of additional fees from buyers are factors that could further bolster profit margins. Despite the current downturn in the housing market, Opendoor is seen as being in a nascent stage, with potential for growth beyond the current situation. The valuation model suggests that Opendoor's stock is undervalued, presenting a potential upside for investors. Considering these factors, Opendoor is seen as having an asymmetric upside potential, with expected returns of over 100% in the coming years. The company's expanding customer base, cost-cutting measures, operational improvements, and strategic partnerships all contribute to a positive outlook for Opendoor's profitability in the near future. Recently, Opendoor Technologies reported its Q1 2023 financials with revenue of $3.1 billion, a decrease of 39% YOY, and 8,274 homes sold. Despite these challenging figures, Opendoor had a strong Q1 2023, beating projections due to a higher market clearance rate than expected. Opendoor sold more homes than it acquired due to low housing supply and lower offer-to-contract true seller conversion. Although contribution margins fell to negative 7.7%, the company has guided for positive revenue and adjusted EBITDA in Q2 2023, with the inventory reset expected to be completed during this period. The company has issued its guidance for the second quarter of 2023, projecting a revenue range of $1.75 billion to $1.85 billion. However, the company's adjusted EBITDA is expected to fall between $180 million and $200 million, reflecting the ongoing challenges in the housing market and the company's strategic shifts. Despite facing uncertainties in the housing market and economy, Opendoor Technologies is expected to improve its business performance significantly. Trading near its book value, Opendoor presents a lucrative investment opportunity, especially as its competitors falter, potentially leading to a monopolistic position in the future. Although impacted by declining home prices, Opendoor has sufficient liquidity to weather the storm, and completion of its inventory reset is projected to restore positive contribution margins and cash flow break-even. While volatility should be anticipated, Opendoor's value proposition for sellers in a bear market and the stabilization of its transaction spread around 3 to 5% offer potential for higher spreads and additional fees from ancillary services. With a 5-year compound revenue growth forecast of 30%, Opendoor has significant upside potential for long-term investors. The quantitative investor, aligned with the company's performance, sees substantial room for further growth and has accumulated open stock through disciplined investing. Overall, Opendoor is well-positioned to emerge stronger and capitalize on market opportunities, supported by its product, capabilities, capital, and team. The iBuying pioneer, Opendoor, is navigating through the current macroeconomic environment and has the potential to emerge as a dominant 1P3P real estate e-commerce platform on the other side of the housing market downturn. The growing list of partnerships and the positive commentary on Opendoor exclusives indicate a bright future ahead for the company. Opendoor has adequate liquidity to get through this tumultuous period. Opendoor's shift from a low-margin, 1P marketplace model to a high-margin, 3P marketplace model could be an absolute game-changer in the real estate market, and it has the potential to offer additive volumes and accretive margins while reducing capital risk. Zillow Group and Redfin Corporation are formidable competitors for Opendoor Technologies in the real estate market. Zillow Group, with a market capitalization of around $10.47 billion, operates a comprehensive online real estate marketplace, expanding its services with features like Zillow Offers. Redfin Corporation, with a market capitalization of around $1.12 billion, is a technology-driven brokerage focusing on online tools and agent services. Both companies exhibit consistent revenue growth and invest in innovative technological solutions. Although Opendoor Technologies has a smaller market capitalization, its shift to a 1P3P hybrid model and emphasis on improving margins and scalability aim to distinguish itself. The competitive landscape, shaped by market conditions, technology, and customer experience, will continue to influence the performances and positions of these companies. While the company has revolutionized the real estate industry with its transparent offer system and convenient services, it faces significant risks and challenges. The company is grappling with rising interest rates and inflationary pressures, which have an impact on the overall sector. A notable concern is the decline in the company's gross profit margin, which dropped from 9.1% in FY21 to 5.3% in the most recent last 12-month period. These factors have the potential to adversely affect the company's revenue growth and profitability. Additionally, the possibility of a recession in the U.S. economy in the near future could further impact the real estate market, resulting in reduced sales and declining property prices. In a recent reset quarter, Opendoor sold off inventory at a loss, but newer acquisitions are performing well and are expected to generate healthy contribution margins. The company's strategy involves building a powerful brand and achieving high customer satisfaction scores to distinguish it from competitors and attract repeat business. Additionally, a pilot partnership with Zillow provides consumers with more options for transacting on their homes. In terms of investment strategy, a strong buy position at $2 for Opendoor Technologies can be a compelling opportunity. Investors may consider employing strategies such as dollar cost averaging, DCA, which involves regularly investing a fixed amount over time to accumulate shares. Selling puts for a 6-month expiry with a strike price of $2 is also a good strategy to own shares at lower price if it drops further. Investors can also opt for split buying technique to gradually build a position with adding to your position on each dip. These strategies can help mitigate the impact of short-term market fluctuations, allow for a disciplined approach to investing, and provide opportunities for cost averaging and risk management in the long term. In conclusion, Opendoor Technologies is an innovative force in the real estate industry, offering convenience and efficiency to buyers and sellers. With impressive revenue growth and a strong financial position, Opendoor presents a promising investment opportunity. Thanks for watching.